What's going on, guys? Welcome back to another portfolio update in my general investment account. So as you guys know from my stocks and shares ISA, the S&P 500 has not been doing well over the past month. It's down 10.44%. But if you look at the 1 week, we've seen a little bit of recovery. It's basically flat, but we have bounced off the lows. If we go into Tesla, we see on the month it's still down 31.22%. But on the past week, we have also rebounded off the lows. So what does that mean for my portfolio? Well, I currently own 105 shares in my general investment account, currently valued at £20,000, just over £20,000. Currently sitting at a loss of minus £1,000, down 4.76%. So I'm basically breaking even on this account. I was a lot higher, like I was nearing £30,000, but obviously we have seen a massive, pullback in the price of Tesla stock. That was when it was like in the 400s. So yes, I did overextend, but this pullback is healthy. Just a healthy pullback in my opinion. Obviously, nothing in this video should be taken as financial advice. If we look at the 1 year chart, we're still up 46.02% over the 1 year. So it's not a bad return for the 1 year, because I was buying, pretty much in this price period in the high 100s and obviously the low 200s. The only reason why I'm currently down on my position in this account is because I also continued buying in the 300s, 400s. I was just dollar cost averaging whenever I had money, which brought up my average price to $255 a share. And honestly, it looks like Tesla has bottomed, but obviously anything can happen. It can continue to fall back down a lot more if they have, a bad delivery report that comes out at the beginning of April. We will see their Q1 deliveries in like a week or so, just over a week. So that could make the stock fall more. But generally, I see like most of the pain priced in. I have a lot of comments basically saying I should sell my Tesla positions and like diversify. But at these prices, it's a bit late. Obviously, you can say in hindsight, oh yeah, I should have sold my Tesla at like $400 a share. And obviously I would have if I knew it was going to get back down to these prices, but I had no guarantee that it wasn't going to continue going up, because obviously, although it would have been overvalued for that time, when you look into the future and the future potential of Tesla and try and discount, revenues back, and obviously you have to kind of weight that with how likelihood the revenues are, because they're in so many different business categories. Obviously the future revenue projections from each of these categories aren't guaranteed. So yeah, I have a lot of you guys telling me to diversify. Even now in the new tax year, I will be setting up a new ISA account with and I've provided not trading 212, or just be holding on my Tesla. But I'm looking at opening an invest engine account and just putting £100 a week into a ISA and just doing the S&P 500 in that, just to have almost that as an emergency fund. But if I want to explain quite why I don't really feel the need to diversify. So I'm holding Tesla for the long term. I don't see myself needing this money like within the next 5 years. This money is going to be tucked away, not touched, for at least 5 years, possibly even more than that. And when you look at all of the different businesses that Tesla's in, obviously the vehicle business is the main focus, and that's if something goes bad in this business, then the stock has a massive, pullback or correction, just because right now 83% of the company's profits does come from the vehicles. But you got to think about the energy storage is also heavily ramping up, and they're obviously in lithium refining and battery cells to make the vehicle, to bring down the cost of their vehicles, to obviously increase profit there. They've got full self-driving, which just has been a massive success in China. They've got their Dojo supercomputer, which, although Nvidia is number one, and Elon has said Nvidia is number one, he is very happy with the progress that they are making with Dojo. And when you have something like AI and the amount of training and compute needed, when you have all of that, it's such a big industry, it's very easy for Tesla just to take a couple percentage from Nvidia, and that will be hundreds of billions a year. So yeah, this will be a profit driver for Tesla in the future. Obviously, that's not as guaranteed as full self-driving. So when you put it in your valuation model, you can't put the same certainty on that revenue. And it's the same with full self-driving. That, like, obviously, everyone's saying that Tesla's not going to be the only one. I do think they're in the lead in terms of their technology, but do I think they're going to be the only ones that are offering a full self-driving service? No. But if you think about the total addressable market of full self-driving, I just think even if Tesla takes 20% of that market, of like a 10 trillion market, that's 2 trillion that they can, like, they can add to their market capitalization for the company. So yeah, it's just a massive opportunity. And Optimus, for Elon to say that they're looking at producing 5,000 Optimus robots this year, and they're going to increase that by 10x in 2026, and that in the middle of 2026, they're thinking that they can start like shipping these Optimus robots to other companies. So Tesla will have got them useful enough that they're actually not just being tested and used in Tesla factories, which will obviously bring down costs. They won't need as many workers, but then they can also export that and charge like a subscription revenue for selling it to other companies. So yes, when people say you need to diversify from Tesla, and obviously if they were just doing the vehicles, I would agree with everyone saying that, diversify away from Tesla. But because I'm holding for 5 years in the road, and because they are in all of these different businesses, when you look at where the future's heading, they are massively diversified in terms of the direction that the economy's going, and they are in a keen position to grasp multiple different new emerging markets and businesses. So yeah, I just see that Tesla is a diversified company, because even if BYD takes a lot of their share in terms of their vehicle sales, but then BYD has to license Tesla's full self-driving then they're going to get revenue from full self-driving. So yeah, although right now a lot of the big picture is their vehicle business, because it has all of these different businesses wrapped up into this one stock. I do think that's why I love the stock so much. It's just because there's so many different businesses going on. You almost feel like you're owning an ETF by owning just one stock, and you have all of the upside potential from these different ventures. So yeah, that basically explains why I'm all in on Tesla. And although I like the idea of diversification, I feel like Tesla as a company is a diversified company because it's in so many different emerging markets. So guys, thank you so much for watching. Please make sure to like, subscribe, and share this video with anyone who might be interested. Guys, see you in the next one. Goodbye.